Hi, I'm Weimin Tan. I'm a Manhattan real estate broker, and I focus on investors from all over the world buying Manhattan condominiums for diversification purposes. So this brief presentation is going to be about the performance of the S&P 500 versus Manhattan condos. Which one did better? This is the opening slide, and these are some examples of our clients' apartments. The one on the left here was purchased close to FIDI, driven by the World Trade Center that was coming up at that time, and it has double height ceilings, so that was one of the key features, and dual exposures. The one in the middle was purchased pre-construction in Midtown East, close to the United Nations, and we have rented it out immediately to very high-end tenants ever since the closing. And the one on the right, that one we just closed about 1 month ago, and this one was purchased pre-construction also, and it's very close to Google. You see this building here? This is St. John's Terminal, which is one of Google's 3 buildings in Hudson Square, and Hudson Square is going to be Google's second campus, with the main campus being in Meatpacking District. Let's move on to the next slide. Okay, this is the S&P 500 index's performance. We are looking at it from 1999, when it was 1,327 points, all the way to 2020, when it was 3,217 points. And over the 21 years, it went up by 142%. Okay, from 1327 to 3217. Now, why did I look at the S&P 500? It's because according to investment theory, right, or value investing, 90% of fund managers do not beat the index anyway. So you should always just invest in the index, right? And the most representative index for the US stock market is the S&P 500. So anyway, okay, it went up 142% over the last 21 years, and let's see how did Manhattan condos do. This is the price per square foot of Manhattan condos. It went from $480 per square foot in 1999 to 2,032 per square foot in 2020, and that's an increase of 323% over the same period, 21 years. Now, so the performance of Manhattan condos is double that of the stock market. And there's one very important thing that we have to consider also, is that when people buy property, there's leverage. When people invest in the stock market, there's usually no leverage, because people don't borrow to invest in the stock market. But with real estate, usually the down payment is, let's say, 25%, right? But the appreciation is based on 100%. So there's a leverage factor, and the return, let's say property prices go up by 10%, because of the leverage, the return is magnified. There you go. And this is the historical P/E ratio of the S&P 500. Historically, it's been around 30 or so. There was a spike here, and then there was a spike here, and in 2020 there was a spike also. It went up to 38. So that's why they're expecting a stock market correction this year in 2021. And that's a brief bio. Thank you for your time.